Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I've got 5 tech stocks to watch here in the month of July 2020. These are some picks that are a little bit off the beaten path that not everybody's talking about, the FANG stocks, etc. And the point here is that the market's running up every single day and we're trying to find some different names to look at and put on our watch list, just so we can continue to look at the landscape as a whole for opportunities. Reminder as always that my stock picks and projections are just my opinion, and you should always talk to a financial professional before taking on any risk in the stock market. But if you do enjoy stock market analysis, fun little lists like these, then please subscribe to the 40 Finance channel. Thank you to the over 5,000 people who have subscribed so far. Alright, so for this list I used exclusively the TipRanks platform and just sorted by some of the best performing analysts and focused exclusively on the tech sector. Again, trying to get past the obvious FANG names and looking at some of the hot analyst picks right now to potentially give us some ideas for future investments. And the first stock on the board today is IAC Holdings. And IAC is basically a conglomerate of websites that they run for profit. Most notably to investors would be Investopedia, but they really do have dozens more, Angie's List, and they used to be partnered with the Match Group and had a host of dating apps, but they have formally diverged those companies into the Match Group, and IAC holds the non-dating properties. So this spin out just happened here at the beginning of July, and that's what makes this stock particularly intriguing, only because we don't have historical valuation ratings in this new format, so there could be some opportunity here. Stock price today at 127.49. You see a P ratio at 101. I would say that's technically 101 because we're going to have to wait for some of the new reporting to come out in this new structure. 52-week range, that really doesn't exist, 35 to 127. What we're really seeing in the new structure is a range from July 1st of under 107 to 127 right now. Forward P not available for reasons we just mentioned, same with the revenue, but they do have $2 billion of cash on hand and a manageable debt load of only $242 million. Again, I use TipRanks to find all 5 of these stocks here today. My affiliate link for TipRanks is down below if you're interested in supporting the channel or just simply to check out the service. On the TipRanks side for IAC, we have 5 buys, no holds, no sells. I made an adjustment to the normal median price target that TipRanks is showing right now at 227. I thought that was a little high, and I looked through the analyst ratings and I made a different average for analysts who have come in over the past 7 days or so now that IAC has a new structure. And the median in that range was 146. So that's a plus 15% from where we are today. I think the market, a lot of these stocks have taken a small dip here today early in trading, so that might even be good news. If you're looking at the long term, you might have got a couple other percentage points of potential built in there. Alright, next stock on the board is nVent Electric. And no, this is not a electric car charging operation or batteries or anything like that. nVent actually provides supplies to data centers and other major electric operations when it comes to things like cabinets, rack space, cooling operations, thermal monitoring, basically all the physical components that you need with data centers and other big electric operations. That's what nVent sells. Obviously, with data centers becoming more prominent across the world, nVent is certainly in a good market for growth, and it's just a matter if they can compete and offer customers what they're looking for. They could be a major player in a growing industry. Stock price today at $18.34. You got a P ratio today of 1698, and this stock from a 52-week range has been between 1053 and 2875. It lands just about the middle today at the 1834. And you see the forward P at the top of 1321 is headed in the right direction. So we're at 1698 today. Forward P goes down a little bit to 1321. Trailing 12 months revenue of $2 billion. So a healthy revenue line there. This is not a super small cottage industry type stock. You do have cash on hand of almost $2 billion and a debt load just over $1 billion. All right, looking at the TipRanks dashboard for nVent, and we have 3 buys, no holds, no sells. Median price target today of $25.67. That's a 39% upside from today. So on this stock, which, you know, from a price per share standpoint isn't very expensive, if you dig into the earnings reports, you learn more about the company. This might be an easy one to throw 100 or 200 shares at if you believe in it and see where it goes in the future. All right, the most well-known stock on the board today at number 3 is Uber Technologies. And Uber is very interesting because obviously they've gotten squashed during the COVID thing, and it's hard to tell how well their industry will do over the next 8 to 12 months with all these health concerns going on. So you could make the argument right now that Uber is at a low point. They've had to shelve a lot of their growth plans. They've pulled back on some of the extra ventures like bikes and scooters and things like that. So the key as an investor is, do you think the world gets back to normal and Uber is still relevant? And if so, do you want to pick it up while things are not going so well? Stock price today at $33.14. We don't have a PE ratio yet for Uber. I think they were hoping to get profitable in 2020. Obviously, the world changed quite a bit, so I don't really think that's going to happen. 52-week range of 1371 at the low point, and then 45.63, which came in sort of pre-COVID days. You got trailing 12 months revenue of $14.5 billion, $9 billion in cash, $9.5 billion in debt. I think the bright spot for Uber in all this is that $9 billion in cash, and I'm assuming that their costs are declining during the COVID time. I don't know that for sure, but it's something to look at. Either way, they have plenty in reserve to make it through this thing in the long term. All right, on the TipRanks side of things, we have 23 buys, 2 holds, median stock price of $41.39 as a target. That is 25% upside from today. And I think with Uber, yeah, there's probably some short-term wins in here as we get, let's just say over the next 3 to 6 months. But the bigger game here is, do you believe that Uber's quest for growth and sort of like world domination in their niche, do you think it's still relevant in a future time? I sort of do myself, and I will likely be taking advantage of the price dips that we're seeing in Uber today. However, the most important thing as an investor is that you believe the bull case, right? And I think with Uber, you really have to read the reports and think to yourself on where you see this company going. All right, next stock on the board is LiveRamp Holdings. And LiveRamp Holdings is sort of a digital marketing play. They have been the leader in what I would call identity resolution for a long time for digital marketers. And that is basically that LiveRamp offers a connection point between different data sources. So if you have audience members on your website that you can identify through some version of PPI info, email, name, whatever, and then you're bringing in audience members from a platform like Google or YouTube or however you do it, email lists, etc., LiveRamp can help you sort of merge those contacts to get a complete view of where these people stand in your marketing funnel. Stock price for LiveRamp today at $46.71. This is a company that is not yet profitable, but you see the forward PE coming in at 200, at least through their last earnings report. 52-week range of 23.44 to 55.59, and it has been on a little bit of an uptick here lately. Cash on hand, though, of $718 million and a meager debt load of only $21 million. So plenty of room to run for them. I think we have to be a little cautious of advertising spend declines and capital investment declines for a company like LiveRamp, but from a proof of concept scenario, I do think they have an offering that a lot of digital marketers are interested in. All right, looking at the TipRanks side of the coin, we have 6 buys, no sells, no holds, median price target of 58.17. So that stands as a 24.5% increase from today's price. That doesn't factor in where the stock might have went up or down today. But LiveRamp definitely has some opportunity. All these stocks at a 15 to 25% increase in this presentation. It doesn't sound like, a billionaire play, but in the tech sector right now, it's not easy to find obvious upside over the next 12 months because of the way things are priced right now. So LiveRamp could be one if you're looking to get bigger returns than some of the behemoths that have run up so high. LiveRamp and some of the others on this board today could be good places to start. All right, last stock of the day is Synaptics Incorporated. And Synaptics makes human interaction technology for devices, right? So when you think of things like interactive screens, voice sensors, fingerprint IDs, things of that nature that are in a lot of our handheld technology, that's what Synaptics focuses on. So obviously this world, I think that they're in a great market, and I think that world continues to evolve. And assuming Synaptics continues to improve their technology and offer better solutions, I think that they're in a great place to grow over the long term. Stock price today at $66.32. You do not have a PE ratio as of this posting, but the forward PE is coming in at 12.5, which is great. 52-week range of 28.8, all the way up to 84.75. Again, we're at 66 today. You got cash on hand of $472 million and a debt load of $500 million. And look at that trailing 12 months revenue. That's pretty solid for a micro tech manufacturer, if you will. 1.35 billion. So there's definitely some good dollars passing through this company. All right, on the TipRanks side of the coin, we got 3 buys, 1 hold. Median price target of $79.50 for the best performing analysts. That's about a 20% upside from today. So again, you want to compare this to small cap pharmaceuticals or something where people are picking 100% upside. You might be a little disappointed in the 20%, but in the tech space, it's not easy to find growth opportunities. So I tried to pull 5 of them in here. And I think the key with Synaptics is really it's going to be the development of phones and screens and iPads or tablets, whatever you want to call it. How much more of their technology can they get into these things? And then they're sort of at the mercy of production releases, right? And we all know one of the things that's changing quickly is the evolution of 5G and the potential that the fourth quarter has a lot of opportunity to sell devices with Synaptics technology in it. So go through the investor report, take a look at what they have to offer, but I like that this is technology that's already in the market making money. Just try to figure out for yourself, what is the growth story? Where is the opportunity? And if you like what you see, then add Synaptics to your watch list. So there we go. We got 5 tech stocks in a crowded and some would say overpriced tech market. Found 5 tech stocks that may still have room to run even at today's prices. Let me know what you guys think in the comments. And as always, please give me a like and subscribe to support the channel. I'll see you on the next video.